Inducement. What? How many times have you heard this word popping up within the Forex industry by now? Why is everyone suddenly coming up with this word? And mostly, what is so special about this one concept? Well, this is the right video for you if you want to know everything about it, where I will be telling you about the importance, the value, and the hype of this one word that is literally taking social medias by storm. Trust me, you want to know about it from me because I was part of the paid community of the men who created the hype around this concept that now literally everyone is using it. So all the point of view in this video will be based on first-hand experience. Stay tuned because if you pay attention to what I'm about to share and show you shortly, I may not only help you to grasp the understanding of the concept, but probably help you to save money on useless courses all over social medias. This being said, let's get started. So first thing first, I want you guys to pay close attention to these 4 pictures over here, okay? Can you spot the differences in those pictures? There is one common factor that aligns all this price action within one single concept, within one single point. Try to think about it, and by the time you guys are thinking about it, I'm gonna add a little disclaimer, and I want you guys to know that most of the things I'll be sharing over here, okay, will be a little bit limited because I do have an NDA agreement with the man that has created this concept. So I do extremely respect the hard work that other people are doing. Therefore, I cannot go against his will of sharing with you guys this information. The reason why I'm sharing what I'm sharing over here is because most of this information currently are publicly available. However, there is one important factor, which is people are misleading you with the wrong information. They do say a lot about the inducement concept, inducement theory, but they do put people in a very difficult situation because they don't know the right information. And I want to clarify this as I was part of the community, the paid community, so I do know what is a BS and what is the truth. And also, most importantly, I will still do my best to give you hints and tips that you can then later backtest on your chart, trying to understand how to use this concept in the most logical and objective way possible, okay? So this being said, let's get started. So first thing first, let's start with the picture number 1, which is, picture A, okay? So we have, what can you see clearly? We have the liquidity over here because of the equals. Price takes the liquidity, breaks to the downside, retrace, and then goes away. Same things over here. You have this high, that price breaks, and then goes to the other side. So takes liquidity. Same over here, you have a channel, or you can call it trend line liquidity, that takes liquidity, goes to the other direction, and then next thing you know, it's just shooting to the upside. Same over here, taking liquidity and goes away. Now, what is the common factor that you can spot it now that I literally drawn in front of you? So you can see that this one, and this one, right? They both have one common factor, which is literally the false breakout. Yes, exactly. The false breakout is out. It's literally the common factor between these 4 type of pattern. I'm pretty sure that you are pretty familiar with this because you might have been a victim of this situation because it happens to me so many times, even till now, till these days, this happens. Unfortunately, this is part of the process. This is part of the mechanism that work within the market. Now, over the last few years, people has been making a lot of different strategy, a lot of different terminology. And one thing that actually started happening is that people started calling the false breakout in so many other different ways. So you have a fake out, you have, if you trade SMC money concept, you have also the FU candle, which is, you can imagine what is the FU is, slang word. So basically, so it's basically, that's what people used to call it, candle, by the way, right? Because it was the candle that was literally taking you out. And then you have, we say false breakout, of course, the one false breakout. And then literally the trend that started right now within the industry, right, is literally the inducement. Yes, exactly. Inducement is literally different terminology, but it's the same exact thing as this one, all the one above here, right? There's nothing different. It's another man that came into the industry. He was very good. Why he got so popular and why everybody's using his wording is because he started doing a lot of ping pong. He mastered the concept of false breakout. While everybody gets taken out because of the fake out. He mastered how to take the fake out. So instead of getting taken out from this fake out, he mastered how to take the trades, right? So he mastered the false breakout, and he started saying, okay, this is the way that you should be trading, because if we take the trade based on our structure, based on our liquidity, whatever, and we get all the time taken out, that means that we should be waiting for price to do the fake out, and then we take the trade. And that's literally why he calls it inducement. He uses his own terminology. Why is it inducement? What does it actually mean, the word inducement? When you have an equal high over here and price breaks to the upside, it's like inducing people to place the buy trade, because now price is going up, right? Imagine how many breakout traders are over here. Imagine how many people saw the buy opportunity over here, right? So it's inducing people to believe the price is going towards certain direction, which is not the case, right? The same thing over here. Now, this breaks above, and a lot of breakout trader, same thing here, you want to go buy, inducement, okay? They're inducing people to go short after they break the channel. They induce people to go low after they break the low. You're following what I'm saying? So inducement is like literally this. So basically, his way of trading is literally taking the trade from these zones. So he doesn't take the trade from the equal, he doesn't trade from the structure, he trades the trade from here, and he mastered it so well that, unfortunately, if you think that, oh, am I going to join his course of mentorship? No, that's not the case. I can tell you, because I've been part of it, and I can tell you that he's extremely professional. He's extremely good. I have nothing to say against it. However, he's so professional that trying to replicate what he's doing is extremely hard. Not for me, but a lot of people, because I personally did master that, but I do not use that. And the reason why I don't use that, because you guys know that I'm a supply demand trader, I'm a structural trader, and when it comes about taking this type of trade, for me, it's like taking counter trend. Now, it's true that he's taking this type of trades because this is a fake out, but he does take a lot of counter trend, because those, what do you think is a counter trend is, right? It's about taking the liquidity, isn't it? Because it takes the liquidity to the left and then he starts retracing. So that is like a counter trend. No worry, I'm going to show you a bit of examples over here now on the chart. Let's jump over here, because there's one more thing that you guys need to know about the inducement. What is that? Well, inducement, okay, as I said before, do not get fooled, do not get trapped by many people telling you, oh, I'm going to show you the inducement, I'm going to sell you the inducement, because they're literally trapping you. Because what they're telling you is that, come over here, I'll teach you how to trade the false breakout. But it's something that already exists. It's nothing new, okay? Like, there are even a smart money concept, or smart money people, if you guys have traded smart money, you know that smart money says always, all the time, that, okay, one second, go up, go down, go up, we got equal, right? Then price breaks to the upside, bam, bam, bam. All right. So what do you got? Smart money trader always say that you wait for equal high to be taken, or trend line liquidity to be taken. As soon as it gets taken out and breaks the structure, you enter on the order block because of the mitigation. To be honest, me personally, I preferred that, because what he is doing, taking the inducement trade, which is basically over here, is extremely risky, because you are literally entering, yeah, you're entering in the best price point possible. But what if this is not a fake out? What if this is the case? And that's what I want you guys to understand, okay? That this could be the case as well. Price literally takes the liquidity, respect the demand, goes higher, and then goes lower. Or maybe it just keep going higher, okay? So you guys have to understand that inducement is just not the wording that has changed, but there's a little bit of something that has changed as well, which is the way the false breakout has been classified. And this is what the man did within his inducement concept. So what do I mean is that inducement can be classified in 3 different categories. The first category is known as minor inducement. Okay, what is a minor inducement? No worry, I'll show you later. The second inducement is the medium inducement, and the last inducement is a major inducement. Okay, basically this man, he has classified this inducement concept, the false breakout, in 3 different categories. Okay, this is like a updating your 2.0 of the false breakout, understanding how to use that. So what do I mean by minor, medium, and major inducement? When it comes about minor inducement, right, you have basically any type of liquidity that gets taken out within the 24-hour window. So what do I mean is this. If we have this session over here, right, for example, within this, if this high gets taken out, which is the London session, okay, this is the Asian and this is the New York, right? What happened, New York and London, of course, what happened is that price takes this high out, and now if you were to have a pullback, that's a minor inducement, because it happened within the 24-hour window, right? The same things goes over here, okay? So if price gets taken this out, in this case, we had a medium as well, because you had the previous day high gets taken out as well, so you had a retracement. However, like this one, you see this low that gets taken out in 15 minutes, that's a minor inducement, because it happens within the 24-hour window. So that's pretty much what is a minor inducement. When it comes to the medium inducement and the major inducement, which is the next one, right, is pretty much this one over here. Medium inducement, previous day high, previous day low, and session high and session low. So again, we go back to over here 24 hours and we can see that this is the range, right? This is the range. This is the previous day high. This is the previous day low. You can clearly see that this gets taken out. This is a medium inducement. Over here, this gets taken out. This is the medium inducement, okay? And then finally, the last one, what do you guys think is going to happen with the major one? Okay, what do you guys think can happen? Major inducement is literally the previous day high, previous day low, weekly high, and monthly low. Now, the way this works is pretty much the way I use, and the reason why I don't use it anymore is because whenever you have a minor inducement, medium inducement, or major inducement, most of the time, these inducements will always be based on counter trend. And this is the reason why I don't like it, because what happened is that you have to understand, and why this is so important, the inducement is that, or the false breakout is that if we break over here, right, and this happens within the 24-hour window, how much do you guys think that we're gonna see as a retracement? I don't think there's going to be a lot of pips, especially if this is a 5-minute or 15-minute within 24 hours. But what if this high, there's a previous day high or a weekly high or monthly high gets taken out? What do you guys think is gonna happen? Let's say this is a previous day high, so it's a 4-hour structure. What do you guys think is gonna happen now? Obviously, you're gonna have an extremely strong reaction over here compared to this one, right? Because this is not gonna give you a lot of pips. Why? Because it's within the 24-hour window. Let's say this is the 24-hour window, okay? While this one over here, being a very long away as a structure, high or low, takes out, and in this case, that's why I love structure, is because the 4 leg, if it's this one, and it takes this 4-hour structural high, what do you guys think is gonna happen? Of course, I'm expecting price go to the downside, right? And how do I take the trade? Just jumping on the smaller time frame, right? Looking at the lower time frame, confirmation, and then taking the trade. And then this is the way I can use that. Now, I don't personally like taking any counter trend because it's very risky unless you use very solid and valid logic and the way you use with multiple confluences, right? Which is absolutely fine. And you can still actually make money with counter trend. And if you combine the counter trend with the understanding of the minor, medium, major inducement, you can literally do a lot of things. But again, this requires a lot of backtesting. And if you want to know how to make money using the counter trend trading, then make sure to watch this next video where I show and explain you step by step why counter trend is important and how you can use the best out of it, especially if you combine it with the inducement as well. I'll see you to the next one.